Why has everybody failed to predict the coming market crash? Because stocks are overvalued, crypto is overvalued, real estate has never been more unaffordable, and gold is at all-time highs. Surely we are in an everything bubble and a massive crash is on the way.
1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
We're down over 16%.
Dow at the same time has fallen about 18%.
Buybacks. The theory here that they're going to divert the money into loans. Let's hope that is indeed the case. But you see, these are pre-opens on the banks here, rather severe drops overall.
And while everybody is correct that everything is overvalued, everything is more expensive than it's ever been in history, but what if we're looking at the wrong place or asking the wrong question? Even I myself have called for market crashes in the past, but what if we're about to face something much worse? Well, in today's video, I'll reveal to all of you why everybody has been wrong in predicting the next market crash and what the real crisis is that we're going to be facing. Because this is not to scare you, this is to prepare you. Once you have this information, you'll know exactly how to position yourself, how to position your family, and you'll be far better off than your neighbors, family, and friends that aren't simply paying attention to how close we are to this crisis right now. Because this crisis that we're heading to isn't just going to affect those that own assets, this is going to affect absolutely everybody, whether you hold these assets or not. So everyone, without further ado, let's get right into it. Well, okay, the first thing you need to understand is, and what many people get wrong is, that is, unless you're a viewer of mine, you probably get this right, or if you're watching this, you're probably very sophisticated. Most people think that the stock market, if that's going up, the economy is doing well. If the stock market is going down, then the economy must be doing poorly. But no, people, the stock market is not the economy. But what if we had a real world example of what the US is heading towards right now, that we can study from history and learn from history so we can be ahead of the curve and know how to prepare ourselves? Because even though the stock market is at all-time highs, just look what's happening out there in the real world. We're seeing unprecedented layoffs. Amazon just announced its largest layoffs in its company's history. Meta is announcing layoffs, and many other tech companies, and not even just tech companies, many manufacturers are announcing huge layoffs as they try to automate things, as they try to replace people by AI. But it's not just that. These companies want more and more profit. This is leading to lower consumer sentiment, and also the unemployment rate is going up. Because just to even have a roof over your head and food on the table is starting to become a luxury for some. And while you may even look at the unemployment rate and it may seem on a historical average, it may seem very low historically, it doesn't paint the full picture. We could have zero unemployment, but if everybody's just being an Uber driver or is just working part-time 10 to 20 hours a week, it is not going to be enough to survive. So you cannot just look at the unemployment rate where if someone's just working an hour a week, they're still classed as employed. We're seeing a lot of the high paying jobs, a lot of the jobs that had good benefits, they're either becoming automated or they're being sent offshore. But again, what countries throughout history have had severe economic contractions or depressions, but their stock market didn't crash? And why we can't look to the stock market to simply see economic strength? Well, an example that is an extreme example, but is simply painting the picture on what's happening at a smaller scale in the United States right now is Venezuela. Because listen to this, Venezuela had an economic contraction. Their GDP contracted by 74% between 2013 and 2023. A decline comparable to countries devastated by war, according to the Economics Observatory. What else happened? Well, they had hyperinflation. The annual inflation rate reached an estimated 1.3 million% in 2018, with prices rising at an hourly rate. While inflation has slowed, it still remained at 190% in 2023. What did this lead to? It led to mass migration. The crisis has caused a mass exodus, with 7.6 million people leaving the country as of May 2025 to escape shortages and poverty. And this led to poverty rates of 50% for the population. So that sounds pretty terrible, right? You think if a country was in this situation, their stock market would be absolutely tanking. But the opposite actually happened. The stock market surged. I'll go ahead and pull up a chart here. We can see what's been happening to the stock market in Venezuela. It is simply going higher and higher, priced in its local currency. But in dollar terms, the stock market index saw its biggest annual percentage drop was in 2018 when it fell, when you price it in dollars, by 94%. While the market may have shown local currency gains during this time, these were erased by hyperinflation. The severe devaluation of Venezuela's currency has made local currency gains misleading, and a true measure of the market's collapse is its performance when measured against a stable foreign currency like the US dollar. But here's the thing, the US has world reserve currency status, and many assets are priced in the dollar. And this leads to a massive privilege for the US where they can print their money and keep on printing it like Venezuela did, but not see the same hyperinflation. Now again, I'm not saying the US is going to face the same situation as Venezuela, but we can see how your currency being devalued, we can see how printing more and more of that currency, we can see how a weak economy doesn't lead to a stock market crash, but it does definitely lead to mass economic devastation. And I believe we're at the very early signs of this in the US. Or in more extreme situations, it's called a market melt-up. And I've warned about this on my channel many times before on videos like this, how I titled it, this would be much worse than a stock market crash, and it definitely will. So the real bubble we're seeing in the US right now is not just stocks, cryptocurrency, gold, which I don't think gold is in a bubble, or real estate. What we're seeing is a fiat currency bubble. It is a fiat currency being printed into oblivion. And just to show you how close we are to a currency reset, again, let's see exactly what the US government is doing, what the central banks are doing, and what has happened throughout history. Well, the first chart I'm going to pull up here, this is the M2 money supply. This is a monetary supply of the US. And as we can see, ever since the 70s, once they went off the gold standard, the money supply has been rapidly increasing and increasing at a faster and steeper rate. Now, we saw things get really crazy where they massively increased the money supply in 2020, and we did see a contraction in 2024, but of course we started to see cracks. And recently, the money supply has just hit a new all-time high. Not just that, but ever since 2008, we saw that the Fed's balance sheet went from around 800 billion all the way to over 2 trillion. Look at this, every single crisis, they have to print more and more. Then it went from 2 trillion all the way up to 4.5 trillion in November 2024. Then they sold it off. They said they're going to sell all their assets, but they had to immediately stop again in 2019 when we saw the reverse repo market crisis, and then COVID happened. And then we saw money printing. We saw, should I say, asset purchases of US treasuries and mortgage-backed securities, because these would have crashed in price if the Fed didn't buy them and interest rates would have skyrocketed. We saw their balance sheet more than double. This is debasement of your money like we've never seen before, go from 4 trillion all the way to 9 trillion. And again, they said, don't worry, we'll sell these assets. It's just temporary. Well, they've gone to 6.5 trillion. And guess what? At the latest Fed meeting, the Federal Reserve announced that they're going to have to start buying bonds again, US treasuries, because we're seeing cracks in the money market funds. Liquidity is drying up. And even though they're lowering interest rates, we've recently seen mortgage rates actually go up. And we've also seen the 10-year treasury yield be very stubborn, around 4%. Now, I know this may just look like numbers on a chart, but let's actually have a look at what the real world consequences are for this with your hard-earned money. Because every single time they increase the money supply, the money in your bank, the amount you get paid every week will buy you less and less. So look at this, everyone. In 1913, the consumer price index for all urban consumers' purchasing power of the consumer in the US city average was at 1,000. Then it collapsed in the 20s, and that's why we saw the roaring 20s, because they printed so much money. And it, spiked after the Great Depression, and then when they went off, when they started confiscating gold, when they had the executive order in 1933, it really started to plummet. And then we see here in 1971, it started to plummet again. And guess where it is now? We can see here in 2020 it was a bit higher. It has now fallen down to 30. We have seen a 97% erosion of the US dollar's purchasing power. Now let's bring up another chart that puts it in a real world scenario. So for example, this chart, a dollar's worth purchasing power of the US dollar. We can see here in 1913, it would buy you 30 Hershey chocolate bars. And I definitely like my chocolate. So I'd love to be able to buy 30 Hershey chocolate bars for $1, but unfortunately we can't do that. And that's the real economic crisis that we're in right now. Then in 1929, it'll buy you 10 rolls of toilet paper. Well, you probably couldn't even buy one roll of toilet paper, especially in 2020 with the amount of debasement we're seeing. And it's even worse now. This only goes up to 2020 when it'll buy you a cup of coffee at McDonald's, but it won't even buy you half a cup of coffee at McDonald's anymore. That's how bad it's been. Now we can also see here what really caused this. Federal Reserve Act creates a central bank with ability to manage the country's money supply. That's what's really kicked off in 1913. Then US President Roosevelt criminalizes the possession of gold. In 1933. Then the Bretton Woods Agreement establishes the gold standard and the US dollar is a world reserve currency. Then we can see the gold standard is abandoned in the 1970s. Quantitative easing begins in response to the financial crisis. And in 2020, the US money supply grew by 3.8 trillion, equal to 20% of all dollars ever created throughout history. This is absolutely theft, everybody. It's theft by inflation and it's theft by debasement. So are you starting to get the picture here? We're asking the wrong question. All these assets are priced in dollars and it's the dollar that's going down. That's why we haven't seen a crash yet, because every time we even get close to a crash, like what we saw in 2022 when the S&P 500 fell over 30%, and I predicted that, we see immediate government intervention. We see immediate central bank intervention because the world today has no political will, because the elite have already got their hold of power. They've already built their wealth and they don't want to lose it. And they don't want to let another generation or another group of people have the opportunity that they had to buy assets for pennies on the dollar. But okay, I know what you may be thinking. Well, then can't they just keep on printing money and everything will be okay? No, people. We are starting to see society break down. We're seeing crime go up through the roof. We're seeing the standard of living being eroded. We're seeing people start to lose faith in the dollar. And again, let's learn from history, because did you know every single fiat currency ever created, not 10, 50, 70% of them have failed, all of them have failed. Because research from the Federal Reserve Bank of Dallas indicates that the average lifespan of fiat currencies since the 1700s is only approximately 27 years. But of course, the US has gotten better at extending that life, but again, it's only buying them time. And let's have a look at what's the average lifespan of world reserve currency status. Well, I'll bring up this chart here, everyone. As we can see, Portugal actually had the world reserve currency status in the 1400s to 1530 for about 80 years. Then Spain from 1530 to 1640. Then the Netherlands from 1640 to 1720. Then France from 1720 to 1815. Then Britain from 1815 to 1920. And then since 1920, it has been the United States. And we can see here the average lifespan has been around 80 to 110 years. That means we're getting very, very close to the US being overdue, not just from an individual currency state, but also from a world reserve currency status, that it's overdue for a big shakeup. And this has led to Russia saying that the US government is going to use cryptocurrencies or stable coins because the US government has a massive, massive problem. It's in unprecedented amounts of debt. Just look at this chart. We can see here, World War I, the US government debt to GDP was 35%. Then World War II was 121% of GDP. And right now, we are higher debt to GDP ratio than in World War II, and we don't even have a world war right now. Things are definitely getting very, very close. The world is becoming more and more unsafe. But imagine what would happen to the debt to GDP if the US did get involved in another war. We would see this absolutely skyrocket. And so what does every politician do? They go, do we want to fix a problem right now and then let everything collapse on my watch? No, we'll kick the can down the road and we will avoid the short-term pain for even worse pain down the road. When if they just simply let the markets reset in 2008, it would have been very, very painful, but we would have had much better, a more sustainable long-term progress and long-term gains. And ever since 2008, since people's retirement funds, since everyone's made so much money from their home, since everybody is now forced to put their money in the bank and they're not allowed to withdraw it, everybody is now dependent on this system, and Wall Street has successfully embedded itself to say, hey, look, if we go down, you're all going down with us. So you better bail us out or you will lose everything. Again, not everybody wanted this, but this is what the government did to force everybody into the system. Because look at this next chart. We can see here, this is the interest the US government has to pay on its debt. And look what's happened just over the past 5 years. It's gone from an interest payment of 580 billion in 2019 all the way to 1.15 trillion today. Just to service its debt, the interest payment is 1.15 trillion, becoming one of its highest expenses. And this is simply only going to rise. This is why, even though inflation is still very, very high, central banks around the world are rushing to cut interest rates because they know the governments are going to default and would have a massive market crash. So they're simply going to keep on money printing and lowering interest rates to make the top, not 1%, not 0.1%, the very few at the top to be much, much richer, and you will all pay for it with your dollar becoming worth less and less. And so what is this all leading to? Well, it's leading to these central banks scramble to get hold of what's real money. Gold. This has stood the test of time, and many people say, look, it's just a relic. It's just, it does nothing. It doesn't produce any income. Well, it does something better any asset can do. It preserves real wealth. And this has led to central banks around the world buying gold at all-time highs. Just look at this. So this is a decade of central bank gold purchases. And this is a good visual here. We can see here in 2014, they're buying about 600 tons of gold. It collapsed in 2020 because they're all going bankrupt to around 250 tons of gold. But we're seeing they've been planning this. They've been buying over 1,000 tons of gold over the past few years, every single year, and it is increasing more and more. I'll bring up another chart here. This is gold reserves by China, and they've increased their gold reserves by about 1,700 tons all the way to 2,300 tons in 2025. So you're starting to see their play here, everybody. They know that this monetary system is overdue for a reset. And what I think will happen is we're going to see a central bank digital currency announced over the next few years because they're going to be forced, just like they were forced to go off the gold standard in 1971. They're going to be forced to create another currency. Before it was paper dollars, but we're going to go to digital dollars. It may even be some kind of cryptocurrency stable coin. And this is why we have not seen a stock market crash. And if they do the unthinkable and keep on printing money at this rate, we may never see a massive market crash of 40% or more ever again, because they'll simply just print more money and all these stocks that are priced in dollars will go up, even though your purchasing power and what you can buy in the real world continues to go lower and lower. So again, I don't want you to be scared about all this. There's no reason to panic. We just simply need to be prepared. So what you need to do, there's no easy way around this, people. I know you may be looking on YouTube for some secret stock that's going to go up 1,000x, or some altcoin cryptocurrency. You put in $1,000 and it'll go to $1 million. Yes, you can also go to the casino. Yes, you can also buy a lotto ticket and that can happen. But we need to be realistic and figure out a real plan and not just hope and pray. If it was easy, everybody would do it. And this will probably be the hardest thing you would do, but you simply have no choice. You have to do it if you want to survive these troubling economic times. You need to go through your budget with a fine-tooth comb, cut every single expense that is not mandatory. Then you need to figure out a way to increase your income. Yes, you'll be paid in dollars. Yes, your pay is going down. But for those that are very motivated, everything is in your control. You can absolutely do it. Either work overtime at your work, find a side hustle, like it may even be doing Uber, and save everything you can. Now, I know what you may be thinking, well, save dollars. I don't want to save dollars. They're being printed and they're becoming worthless. Yes, that's true, but this is just a short-term strategy. If you have any debts, you need to pay that off besides your home. Now, once you've paid off your high interest debt, you need to have an emergency fund because layoffs are coming and you do not want to panic if you're laid off next week. So again, once you've done all that, made a budget, paid off all high interest debt, got your emergency fund, only then you can begin investing, because with investing, it's very emotional and you need to be very disciplined. And again, what are the elites doing? They're buying real money. That is gold. You may even want to diversify into some silver. I also know it's not for everyone, but I purchased a small amount of Bitcoin because it is accelerating much higher than inflation, and it's just another diversification tool. There also is a lot of commodity stocks that will go up when prices go up, like consumer staples. And if you own your own home, you're already diversified into some real estate as well. So there's no need to go out there and buy more and more condos. If you just follow those 4 simple steps, even if you just have 1 ounce of gold, you'll be wealthier than 98% of people. But everyone, tell me, what do you think about all of this? Why do you think the markets haven't crashed yet? What do you think about the government making our money worthless? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.